Welcome to Markets Now. I'm Michelle Rook with Mark Schultz, North Star Commodity and Grain and Livestock Futures, all trading in the green on Wednesday. Mark, felt like a risk-on day. What was driving that? I know the dollar was sharply lower, but were we also more optimistic about some of these trade deals?
Probably a little bit of both, Michelle. The trade deals, of course, they're ongoing right now, and we're getting close to some deals being done. But I think the currency probably has one to keep a close watch on in here. The U.S. dollar index is down at 99.50. On a technical basis, you close twice below that level. I think it opens the door to see the dollar going down to 92 to 94. So that 99.50 is kind of a big support level. And again, if a lower dollar historically is always more favorable for U.S. commodities.
What about weather? Was that a factor? Are we putting in a little weather premium with these really wet forecasts in the Eastern Corn Belt?
Well, the weather premium maybe comes in just because of the time of the year. But if you just look at it on the surface right now, I would say we're probably a little too dry in the Western Corn Belt. Got to watch that Southern Plains area. Watch your South Dakota, Nebraska, pretty dry, place like that. But they don't need much rain in order to get the crop going. So to me, I look at it as the weather being warm and dry would be more on slightly bearish to the market than it would be bullish. Now, you cross the river and go the Eastern Corn Belt. It looks like, at least in the noon maps, that the weather patterns are going to shift that rain a little bit further east. So you may get back into this Missouri, Arkansas, up the Ohio River Valley, might be back into where we get into some excessive rains once again. And that may start causing some issues there. So just things to watch. South America, they keep talking about it's going to get dry. Rainfall to me has just been more right on for what they need just to get by. It's not abundant, but the biggest thing there is that the temperatures in Brazil are more normal to below normal temperatures. So something has to change. But you only have about 3 more weeks, and the weather is going to be basically over with for Brazil.
No doubt. So when we look at the trading ranges that we've been in here, even today, the grains were higher, but we've not been able to get and close above these overhead resistance areas. Do you think we will, and what would it take to get there?
Well, I think you're going to still have to have something on the weather front in which to get the market to move to the plus side. So watch your resistance levels up at this 490 to 505 on May corn. Your D's corn is going to be in that 470 to 480 area. That's going to run into resistance. The beans they're right there at 1035, 1038 area is the resistance. They closed at that level today. If you get a couple closes, watch tomorrow export sales, see whether or not you get something that turns around and stays away from cancellations. I do expect export sales to be pretty good. Our corn export business continues to be pretty stout.
With China, things continue to escalate on one hand, but on the other hand, it looks like they might be open to talks. If we're respectful, they're putting a new negotiator in place. Does that give you hope that we're going to be able to make any ground or up or not?
I don't believe China's going to go quietly in this trade negotiations. I think they've got too much at play. So I think it's going to be a long type of standoff before we see anything being done. I would probably be more inclined to see that we get other countries going our way with some trade deals getting announced. Try to get the pendulum and the momentum swinging in that direction is going to be more of the telltale sign there for the time being.
At the same time, President Trump is talking to, 70 countries out of the 130 that he put reciprocal tariffs on, but asking them to isolate China so that they don't do an end run around us in terms of tariffs. Do you think that strategy will even work?
I would say China's probably doing the same thing as we are doing to them, trying to negotiate with other countries to keep their business. So I think it's great in theory. I would like to hope that it would work. I just think that's going to be a tall task.
When we talk about the devaluation of the US dollar, Argentina has, I think, tried to float their peso there to try to get some selling by their farmers. Talk about what's happening there and the impact it's having on our market.
Well, the Argentine farmer is in the midst of their harvest, so he's got the grain now available to put into the world market. With the Argentine peso declining, and over the last 2 days down roughly around 12%, you're going to start seeing Argentine farmers, it's more advantageous for them to be more aggressive with their sales. And that's the theory behind this whole part, is the currency goes down and puts more of the grain into the world market. So hopefully that's their end game there that they would like to see. And the other side, you've got Brazil, where their Brazilian real has still been extremely low in history, in fact, down towards its all-time record lows. Just hasn't seen much of a move back to the upside. So two of our stronger competitors in the export arena still have a currency advantage to us at the present time.
So the cattle market, a strong day there. We've had, I think, 4 up days now. Do you think that market, the funds are piling back in there to buy? Has this been about the futures discount to the cash that we're trying to make up, or is there something else going on?
No, I think it's more of a futures discount to the cash market. So cash is going to be important to watch here. It was last week. We were down $3 to $4 last week. Looks like we're trying to hold basically steady, maybe steady to a little bit firmer. As far as domestic demand and our retail demand, it usually still stays strong until we get into the first weeks of May. Then we start seeing some issues that could start to develop there. So I think we got a little bit more time on our hands to see some better price opportunity to go on up. But this cattle market has performed very nicely. But to me, I still think it's more of the discount to the cash market. So cash is still important. If it holds on up, we'll be fine. Bottom line is we're still very tight supply of meat in this country. So it doesn't take much in which to make things more friendly to bullish on the cattle market.
So Mark, the funds, we talk about that they have done some liquidation since the stock market debacle, but it'll be kind of interesting to see the commitment of traders report this week to see if, after we had that big reversal in the stock market and the delay of the tariffs, whether they're starting to come back in and buy, right?
Well, they're holding a huge net long position. So yes, and that is, of course, as of last Tuesday, and the big washout was on Wednesday. And then we had the big reversal to the upside, and we've been following to the upside almost every day since then. So yeah, I think this will be interesting to see where they are, but one has to be very careful here with that massive link that they have on. Things have to continue to feed the bull market every day with bullish news.
We did not talk about cash cattle trade in terms of expectations. We haven't had a whole lot of cash cattle traded this week. Sometimes we wait until after the cattle on feed report. What's your sense of where that could develop this week?
I think overall it looks like it's going to be steady, and maybe steady to a little bit firmer. That's the feeling I get with this market right now. You see some bids that are coming out today, and they already look like they're steady with a week ago, and they're bids and no takers on the other side. So I'm kind of leaning for a steady, a little bit better go to the cattle market.
Do you think that the cattle market can go back and retest the highs at some point?
Well, we moved back in within $5 to $6 of the highs. The technical end of it still would suggest that we've seen the high of the market, but I think we could probably still get up another $2 to $3 more to the upside. I'm just amazed of how well it has gone up on a daily basis, and consistently 70 cents to $1.20 to $1.30 almost on a daily basis here for the last 4 days.
Hogs have been quite surprising, I would say, the strength that we've seen there, especially in light of what's been going on with the China trade war escalation. Is that market looking ahead? Do they think we're going to get a deal at some point with China, or is this just short covering at this point?
Well, we definitely got into some significant oversold conditions on the pork. So the pork market has moved on up, and yes, nicely, putting on roughly $8 to $9 in just a week. To 10 days. So a pretty impressive move. We're getting back up into some resistance levels that I see between that $98 to $99 on the summer hog contracts. The fall months are still way too low in my view at the present time. Watch your business here. We export quite a bit of pork or a fair amount of pork to China. With the tariffs on, I will see whether or not there are cancellations of Chinese pork, of U.S. pork going to China or not. And then again, these trade deals become a little bit more important. Hopefully they include beef and or pork.
Yeah. Do you expect that we are going to see some cancellations of either beef or pork here by China or any other customers for that matter?
Well, one would think we would, especially with China, not so much with anybody else at this point, but China, I would say, in the fact, if they don't, then I would be looking at it as being more friendly to the market than it would be to the negative side.
All right. Thanks for joining us, Mark Schultz with North Star Commodity. That is Markets Now.